72.55. Mr. Oliver Slope, you have 90 seconds to impart on all of us everything you know about the livestock market. Have at it.
Well, we talked about the 20-day moving average in the grain markets, and the 20-day moving average has kind of been a talking point here through the first half of this week's trade, which we rejected those price levels for live cattle and feeder cattle Monday and Tuesday. We broke lower on the open this morning and really just been consolidating sideways. You know, August is historically a pretty tough time of year to get a big relief rally or seasonal rally in the cattle complex. So I know a lot of people that are bullish the market are looking forward to putting August behind us and turning the calendar into September. And I think live cattle can probably start to stabilize a little bit. Looking in that December contract, I think we can probably test and defend the lower end of the recent range near 173, 174. For the feeder cattle market, I'm a little bit hesitant to be optimistic going forward, especially if we do get a relief rally in the grain markets. That may add a little bit of a headwind in some of those deferred feeders contracts.
Well, I mean, there's a lot going on over there still. I think that we kind of were on pins and needles waiting to see what we get from NVIDIA, but that didn't really change anything in the end. So we shall see going forward. But all I know is that whatever happens in the next 2 or 3 months, whoever's the president, in January 1st has got a little bit of work to do. That's all I'd say. So appreciate you coming on. Great stuff and great information as always. Oliver, have a great weekend if I don't talk to you. Oliver Slope, Blue Line Futures in Chicago. 143 points better in the D's. 69.98 is last. We're 27 points off the high of the day. Let's bring in our guest analyst. He's going to be batting cleanup for us today. He's going to straighten it all out, tell us something that nobody else has told us the last 5 hours, and that's going to be Mr. Oliver Slope, Blue Line Futures in Chicago. Oliver, thanks for being on.
Well, thanks for having me, and I feel really lucky and privileged to be on today. We got to talk about a green market across the board, something that we haven't been able to do for quite some time, it seems like. But the theme of today's trade is really the 20-day moving average. We're testing that in corn, beans, and wheat, even in the livestock markets, and that's kind of one of those self-fulfilling technical levels that a lot of traders are keeping a close eye on. For corn, that comes in at 397.25, and we have not closed out above the 20-day moving average since July 25th. So if we're able to get out above there, as well as trendline resistance, potentially that sparks a little bit more momentum to the upside, and we can make a run back at the highs from August 6th. The highs from August, that comes in near 409. And for soybeans, that 20-day moving average, 988.5, and we have not gotten out above there with consecutive closes since May. So those are the big levels to keep a very close eye on. I think that we can maybe get a little bit more momentum. You know, one of my big question marks is, has the high yield estimate been put in for the markets right now? Have we priced in perfection? I think that's the big question mark with September futures going into delivery. Potentially that spurs a little bit of a relief rally here in the near term. How much of a relief rally? That's going to be the big question going forward. Yeah, it just feels like we priced in a huge crop, but maybe not quite as huge, but still huge. So we'll see what that does to the prices underneath. All right, stay right there. Thanks. That's great stuff. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with Mr. Oliver Slope, Blue Line Futures in Chicago. We'll be right back.